More Mag 7 earnings on deck this week. Meta and Microsoft out after the bell today, and Amazon is set to report tomorrow. Joining me now, we want to bring in Kevin Mahn. He's Hennion and Walsh Asset Management President and Chief Investment Officer. It's great to see you. So let's talk about what we heard from Google and maybe what that signals that's ahead here for some of these other Mag 7 names. One of the big concerns going back to last quarter was the massive spending on AI. It certainly looks like, at least for Alphabet, that it's paying off. Are you expecting for that to be the case with some of these other big tech giants?
It's all about AI once again, Shauna. I'm speaking at a conference in Boston this week, the NICSA Asset and Wealth Management Summit, and the focus is on AI, alternative investments, and artificial intelligence. And one of the comments I made yesterday was that I see a bigger risk in underspending in AI than I do in overspending in AI. But we do need to realize that AI is a long game. And all of these CapEx spends that are taking place aren't going to necessarily translate into return on investment for quarters, if not years to come. So continue to look for those companies that are spending in this area, have a commitment in this area, because it will benefit them down the road.
So then, Kevin, it doesn't sound like you're expecting to see any signs of exhaustion of AI spending.
Oh, no, I still think we're only in batting practice of a doubleheader right now. We're going to see more and more commitment to this space and not necessarily realize the benefits of all that spending, once again, for years to come. But I look for different areas in the AI ecosystem that are benefactors of all this spending that's taking place. One of those areas, which I think is going largely underreported, is the energy sector, specifically as it relates to utilities. All of these data centers that require tremendous amounts of energy cannot produce their own energy, at least not yet. So they have to turn to the utilities of the states that they operate within for either electricity, natural gas, or, as we're now finding out, Shauna, nuclear power.
Yeah, and Kevin, it certainly has been a switch here, just in terms of the narrative. Historically, when you think about utilities, you think of a pretty boring sector. I think that's safe to say.
That's right.
But now there's lots of excitement. We've certainly seen that played out since the start of the year. I'm curious, just in terms of the top ways then to play some of those favorite names within the utility sector, what are they?
Yeah, I would start by saying there are three tailwinds that are going to support future growth in the utility sectors, recognizing that they're having their best year to date in the last decade. But one tailwind that I see is, and you pointed out, they're more defensive in nature, and volatility has been largely absent from the markets thus far this year. So I would anticipate some more short-term bouts of volatility through the next couple of months. But beyond that, they're also known for paying a high level of dividend income. And as interest rates are forecasted to decline over the next 2 years, utilities and their dividends will become even more attractive. And finally, they become a backdoor play into the AI revolution. Three names that we like in this sector that we hold. First, DTE Energy. They got a yield of about 3.3%, a PE of only 17. Their stock's up 15% year to date. And not only do they supply electric and gas utilities to customers in Michigan, but they also own the Fermi 2 nuclear power plant. Two other names similar in that regard, Duke Energy and Southern Companies, two of the biggest utilities in our country that also own nuclear power plant and supply natural gas and electricity to their customers. One of their customers, of course, being data centers.
Kevin, give us a better idea of this opportunity, just in terms of the growth that we could see over the next 12 months, 24 months. What do you think that looks like?
Consider this, Shauna. Over the next 6 years, it's forecasted that data centers alone will draw down up to 10% of our country's entire electricity grid. 10% data centers alone. So we're going to have to look for alternative means by which to power these data centers and all the CapEx spend that is taking place in these intensive AI algorithms. So you're going to have to look at electricity, natural gas, and now nuclear power. So there's more growth ahead. So look for those utilities, such as the three I mentioned, that do have a stake in the ground as it relates to nuclear, but also have a strong customer base, strong balance sheets, and pay good dividends.